All right, Jeff Benson coming to you once again from Jacksonville, Florida. Just want to tell everybody I really appreciate you taking the time out of the day to kind of set the agenda a little bit. We're going to talk for 20 minutes or so, then open it up for a Q&A. We've been doing this for quite a while now. This is another one in our series of educational webinars. So we spend a little bit of time talking about our program and our product, but for the most part, this is a general educational webinar on builder's risk. I mean, that's one thing I love to talk about for those of you that have attended before. So it's a great topic, and I am the Victor Builder's Risk Program Manager. I have a team of people here in Jacksonville, and we're here to help you out. So just always remember that. We'll give you the contact information as we get into it. So before we get into the presentation today, I want to kind of set the parameter a little bit. So I think we can all agree that construction projects are taking longer to complete than they were a few years ago. And we know that's because of supply chain issues, labor issues, permitting issues, financing, on and on and on. So projects are taking longer. So today, as we talk about this topic, keep that in mind. I'm going to give you some ideas of, things that you should be doing to make sure that we have proper coverage in place as these projects take longer. And the other thing that I want to leave you with today is, and we had a webinar a few months ago on insurance to value. Keep in mind that projects are taking longer and they're costing more. So the completed value continues to increase. Once again, as you run across this, make sure you tell your builder's risk carrier, we need to increase that $1 million house. It's $1.2 million now. So that would behoove both you as an agent and your insureds to get the proper value. All right, so enough about that. One thing that comes up a lot in our business is, and we do a lot of detached single family ground up new construction. A lot of times they say, well, maybe we should just get a homeowner's policy as opposed to a builder's risk policy. Why do I need a builder's risk policy? So that's a pretty easy question, and we're going to spend the next few minutes talking about that. But the bottom line is we have a product that is designed to cover the exposures of a building being built. And I'm going to go through some of that. The homeowner's product basically is not designed for that. It's designed for a permanent property and other things. So just keep that in mind. So this is kind of the topic today. The first thing you got to ask yourself as an agent, and I know I've told you this on a number of occasions, but let's go back over it, is who is your insured? Is it Bob the builder? Or is it Bob the owner? Or is it Bob the subcontractor? Or is it Bob the owner acting as a general contractor? So those are the four options you have. And that will dictate, I still will contend, and I'll go through that today, that regardless of who the insured is, the builder's risk policy is the best coverage form for buildings being built, course of construction. And we're going to talk about that. But I do want you to understand that you have to ask yourself that, because it's very, very different. They're looking at the building a little differently, even though when we really get into this, you'll see that the owner and the contractor have very similar exposures as far as getting the project completed on time with the right insurance to value to protect themselves against any catastrophic event or partial losses. So we'll go through all of that. So it's still very critical. But so once again, be very cognizant of who your insured is. So once again, named insured versus an additional insured. You hear a lot about this, and I do not want to go down the rabbit hole of general liability and casualty lines right now. We are talking about builder's risk, which is an inland marine property form. So it does mean something a little different than this. So the best way to do this, and we've been doing this for a long time in builder's risk, is your insured is the owner. So you're going to write a policy in his name, her name. That's fine. I would go ahead and add the builder as at least an additional insured. If that building entity is an additional insured, come claim time, everything's going to be settled correctly. We shouldn't have a problem. The other piece of that is we're going to get into something called subcontractor's interest, not covered on homeowners. It is covered on a builder's risk policy for the most part. So keep that in mind too. But you want to make sure that all of the interests are protected the best as possible. What we run into a lot is maybe the specs of the job will require either the owner or the builder to get builder's risk insurance. So sometimes the owner goes out, and what does the owner do? They buy the very least expensive coverage form that has no coverage, and they think they've met the criteria set out in the bid specs, and they haven't. So once again, I guess the bottom line is about 75% of our book of business is written in the name of a contractor, general contractor. So usually that's the way it's done, and it's probably the best way to do it. So in that case, the policy would be in the general contractor's name, and they could add the owner as additional insured. Under our form, all the interests of the subcontractors are automatically protected. So as you can see, anybody involved in the project is going to have protection under the builder's risk policy. I'm not going to go too deep into the homeowner's policy because they do vary by carrier, but some of them have endorsements, and you can endorse buildings under construction, but you're still not going to have some of the coverage we're going to talk about in a minute. So, but once again, I would always go to the specs, and I wasn't going to touch too much on commercial today, but usually in commercial, the bid specs are very specific as to builder's risk and what limits you need to have and what coverages need to be there. And the wording on the named insured is very specific. So just keep in mind, you need to talk to your builder's risk underwriter to make sure that what you're offering to the insured is the proper policy. Homeowners versus builder's risk. So under builder's risk, like I said, it's really a policy designed for course of construction projects. There's, on our form, we have 20 automatic coverages. These are coverages that are built into the form. They have some sub limits, but they're automatic. Nobody has to negotiate for them. There's no additional premium for them. And these automatic coverages are designed to protect both the builder and the owner in the event of a claim during course of construction. Things like theft of building materials. So on a builder's risk policy, if something in our policy, they have complete full limit coverage on theft. So to give you a scenario, and this does happen, we've been having a high incidence of theft claims lately. We're going to have a webinar coming up on that too, how to protect our job site again, because our theft claims are increasing. Cost of lumber goes up and projects taking longer. But let's say the lumber package was delivered to the job site and you had a homeowner's policy, and maybe they're obviously in the name of the homeowner. Well, unfortunate event, overnight, someone steals the lumber package. The entire thing is gone. $50,000 worth of lumber. Well, you think, no problem. Well, the homeowner's policy might say, well, that project, that building material wasn't installed yet. Our homeowner technically didn't own it. I don't think there's any coverage on that. So now we're out $50,000. Now you could say, well, it's the builder's responsibility. But what is that going to do to the project? Is it going to delay things? I would say it delay it a lot. So it's just not a good way to write that type of exposure. So that's one way. I've actually seen homeowners policies that exclude theft on building materials that aren't attached specifically. I mean, that's in the wording of the policy. So make sure that that's a big one. What about property in transit? Property temporarily stored at another location. Maybe the builder is storing something somewhere, somebody steals it. Absolutely no coverage on the homeowners. On our builder's risk policy, there would be coverage for that, as long as it's materials that are meant to be installed on that project. And that's really the key. Maybe the homeowners covers it once it's installed, but ours covers it once it's installed or meant to be installed. So those are two of the coverages that I think are very critical to this. We have other coverages that are designed specifically for builders, soft cost coverages and expediting expenses and some small pollution coverages, and just all those things that protect the builder's exposure. But once again, even from the viewpoint of the owner, if we have a claim, we don't want this whole project delayed. I don't think the owners want things to go on longer. They want to move in, they want to get it completed. So, and obviously they don't want their builder to go bankrupt or something. That would really be a disaster for the owner too. So once again, builder's risk form is better regardless of who the entity is. Subcontractor interest. What if we have some appliances delivered and the subcontractor that's installing them, they actually own the appliances, they bought them, they're delivered to the job site and they're stolen. On the homeowner's policy, once again, they're going to say, our homeowner doesn't own these, the subcontractor does. No coverage. Under our form, whether the owner owns it, the general contractor owns it, subcontractor owns it, does not matter, as long as it's installed or meant to be installed under our project. This is a big gap in coverage. Probably that one thing alone would say you should probably have builder's risk versus homeowners, just for that. I will reiterate, like I always do, builder's risk is an uncontrolled inland marine line. Different forms say different things. Make sure you understand the form you're selling. I'm not a personal lines guy anymore. I used to be a long time ago, but I understand that the homeowners policies vary dramatically. Even coverages now vary state to state. So if you are involved in homeowners, make sure that you understand the homeowners form and any mandatory endorsements that are attached that change coverage in your state. So a little word of warning there. Project timeline. So this is, I'm going to touch on this for a little bit because I think this is important. So we know they're taking longer to build. We get a lot of things submitted and they say, well, you know, we've been doing this for a couple of years. We just need another 6 months coverage, but the builder's risk carrier that's on it now does not want to extend it anymore. Well, unfortunately, when you run into that, which is real life example, that might be the one time where I say a homeowners might be the way to go. And I can't believe I'm saying this, but let's say something is 90% complete. I don't know of any builder's risk carrier or underwriter that wants to take that exposure. At that point, it might be time, if your insured's the owner, to try to get a homeowners company to write to homeowners since there's only 10% of the project left. The real trick though is if you're insured as the contractor, you can't write a homeowners policy. So what do? So I mean, those are tricky. Might be time to call our friends at Lloyd's of London to try to place those very special type of risks. So what is the scope of the project? We're touching mostly on ground up new today, but on renovations, sometimes people say, well, I got my homeowners policy and I'm just doing small renovations. I think there's coverage. There probably is some coverage on your homeowners, but I go back to what I talked about earlier. Is theft of building materials covered? I don't know. What if they do something and the building collapses? Is that covered? I don't know. Maybe, maybe not. So these are the things, even if it's a renovation project, I would highly advise a builder's risk policy to fully protect the exposures of that risk. A lot of times it is the value of the renovation. If they're doing a very small renovations, putting in some new windows, maybe you're okay. I would also make sure that the subcontractor should probably have an installation floater if you truly don't have a builder's risk policy, but that's really for you to talk to your sub about that. And the last one here is vacant during renovation. You know, if you have a building that's vacant, homeowners aren't going to cover it, a homeowners carrier. Could you go get a vacant policy? Perhaps. But on the other side, if it's not vacant for any length of time and it's an ongoing project, that probably belongs on a builder's risk policy. It kind of always goes back to that. No matter the exposure, if it's a construction project, renovations, remodeling, ground up new, residential, commercial, builder's risk is the way to go. It protects all the parties thoroughly. Commercial property, I'm just going to touch on it for a minute. This is something that we get involved in. I'll give you an example. A lot of times we'll have a renovation of a school building or even a ground up new gymnasium being built. And obviously the school system has a master policy. So they're going to say, well, we could add this to the master policy, but they recognize, or the risk manager says, not the best coverage. What we prefer you to do is go get a builder's risk policy. So we get those a lot of times. So that would be fine. We'll do that. Even if it's a renovation, maybe we're not insuring the existing structure because that's going to be on the master policy for the school system. We will entertain the remodeling piece of that. We do that a lot. You know, the other day we did a gymnasium that was being built. So that's something we'll look at. But once again, even the risk managers that handle these larger accounts recognize that builder's risk is the best way to cover these things. And a lot of times the lending institution is going to have very strict guidelines on what type of coverage you get, what limits you hold, and we're going to see that very specific. So really the only way to meet those guidelines is with a builder's risk policy. Just to highlight some of these coverages, and I touched on a few of the main ones, but you can see theft, transit, storage, expediting, soft cost, delay in completion, kind of soft cost is a subset of that, flood and earthquake. So a lot of times not covered on homeowners. So you either need to get a separate policy or you need to get a builder's risk policy. That's what I'm going to say. I think that's the best way in all of these cases. So just in summary, who's your client? Is it the owner? Is it general contractor builder? Is it subcontractor? I mean, you need to ask yourself that first. And regardless of who it is, still builder's risk is the way to go. But you have to identify the insurable interest. That's what property is all about. Who has an insurable interest in this project? How do we protect that interest? And you need to review the criteria required either in the bid specs. Like I said, in builder's risk, you can be either a named insured or an additional named insured. You should be okay. So that's kind of it in a nutshell. And that's permanent versus builder's risk. And the bottom line is, I think I made it simple. Hopefully, it's just builder's risk is a better form for projects that are under construction. Simple as that. So in closing, I would just like to say, once again, this is kind of our product. What we're looking at, like what we really want to do, our wheelhouse is the pass-through risk. This is ground up residential. We can entertain up to 5 million frame, up to 10 million other construction classifications. We do readily right now in 48 states, and we are a market. So we have a great portal, basically quote, bind, and issue in a few minutes. Sign up, enter some basic data, hit a policy, get a proposal, looks good, hit a button and get a policy. So we would love to have a shot at all your business that fits that criteria. And as always, if you have one that's a little unusual, give us a call. Just to put our contact information, you can give Donna or myself a call. Call the 800 number, 944-7472. You will get one of our team here. They'll help you out. That's our contact. And any questions you ever have on course of construction, I do like talking about it. I've been studying this for most of my adult life, so I do like talking about it. And just when I think I know it all, something happens and I have to look at it. But you will find I will not make up an answer. Sometimes you'll ask me something and I'll go, that's a good question. Let's take a look at the form. I learned that a long time ago. Maybe we look at the form and talk about it. So that kind of wraps it up. We talked about permanent versus builder's risk. How do you cover construction projects? Hopefully we piqued your interest a little bit today. And what I'd like to do now is open it up to questions. So Darcy, what do we got?
All right, Jeff. First question is, what are your max EQ and SL limits?
What are the max earthquake? We'll say EQ is earthquake. And you said earthquake and flood?
Yeah.
All right. So I'll do a political answer on that. It depends on where the risk is located. We obviously look at the zones, be it the flood zone or the earthquake zone, and we have certain max limits in those areas. We're not a big rider of earthquake in zone 1 like the Californias. We don't ride California quake, and we kind of don't ride a lot in the places where really exposed. But didn't we just have an earthquake in Georgia the other day? That's pretty unusual. But so that's really, you'd have to submit the risk and then talk to us about that because we map every risk. And the same thing with the flood. Whatever the flood zone is dictates our pricing and our limits that we have available, our deductible. We do have a sister company, Torrent Technologies, that will write flood for us too. So I think they would probably have more capacity even than we do. And we can put you in contact with them if you need higher limit flood stuff than we offer. Good question.
All right, here's a bit of a longer one. So when an insured buys a new property and decides to do major renovation work, they don't have a homeowner's policy as the property is vacant, and they don't have a builder's risk policy. So there's exposure for both existing structure and for new construction. How would you insure this?
All right, so that's another time where the builder's risk policy would shine. So we would write a policy that would endorse the policy to include the existing structure, and the renovations would be covered on the policy, as it always would be. So you would literally have one policy that covers the existing structure and the value of the renovations, and that would be the builder's risk policy with that existing structure coverage attached. Now there are guidelines, underwriting guidelines as to the scope of the project and the values insured. You'd have to work that out with your underwriter. But that is where it goes. Good question.
All right. What is the difference between a second named insured and an additional interest on property basis?
All right. So like I said, it gets a little tricky because it kind of blends together with general liability, and I want to stay away from that. So basically in builder's risk, what you want to do, as I said, you have a named insured, and there is a way if you want to have multiple named insureds, probably could work that out with you. But just as clean from a property standpoint would be have a named insured and an additional named insured. When you start playing around with lost payees or as their interest appears, you might reduce their coverage under the form. So I wouldn't advise that, because like a lost payee basically says, if there's a claim, you'll be on the check. That's all it says. It doesn't really protect your interest other than that. So I don't really like lost payee forms. I would rather add, if you have a builder building something and an owner involved in that, they both should be on the policy, either as a named insured or an additional named insured.
All right. So if an owner is paying a draw to contractor for the building, who should purchase the builder's risk policy?
It's a good question. A lot of times it's spelled out in the contract. You'll have a contract that the owner and the contractor work out together, and it'll say which entity is responsible for the builder's risk and what limits should be, lending institutional dictate limits. If it was up to me, and this is just me, the world according to Jeff Benson, I would always like to have the builder as the person buying the builder's risk, because they have the most exposure. A lot of those things we talked about are really for a building entity. And if I was a builder, I would sell that fact. I would tell the owner, I'm going to build you a house. Don't worry about the builder's risk. I'm taking care of it. You don't have to worry about it. It's almost like an added feature. Like, I'm a high quality builder. I get my own insurance. So that's what I prefer. But having said that, we do write, some owners will say, I don't trust the builder. I want to have my own coverage. Okay, well then go get yourself a builder's risk policy. One thing I do see, I'll warn about, is we get a lot of times where something's submitted and it's 80% complete. And I'll say, well, what in the world happened? And they're like, well, the builder thought the owner was getting the coverage and the owner thought the builder was getting the coverage. We literally hear that every day. And neither one of them got it. So now it's 80% done and they realize they have $1 million exposed and there's no coverage. So please don't let that happen. So I would say builder number one, owner number two, but definitely one of them needs to get it. How's that? My wisdom of the day. Good question.
All right. Can you add general liability to the builder's risk, or is it offered on a separate policy?
Okay, our program is monoline builder's risk only, and I've never seen GL added to a builder's risk policy. They're two separate policies, but it is you would need a GL. The builder needs a GL policy. Now, sometimes the owner will buy a premises liability policy. We're not a market for that, but they are out there just to protect a little bit. Doesn't protect a lot, because anything to do with the project is not covered. But if someone slips and falls and sues the owner, then the premises policy would respond. But once again, that is a separate policy. Builder's risk is very specific. It is a property in the marine form, does not cover those exposures. Good question.
Okay. Can the policy be renewed if the project is not yet completed?
Okay, now the way we handle it is we extend policies. So for example, you wrote a 12-month policy for us, and in the 12 months, they're not done. So for whatever reason, supply chain, labor, permitting, whatever happens, the sun came up and they just didn't get it done. What we will do is we extend the original policy. All you got to do is give us proper notice, which, try not to wait till the last day. It's better if you kind of give us a little. In fact, if it's ground up new, 10 months after we wrote it, we will send you a note saying you got 2 more months coverage. If you want to extend it, let us know. But then we would extend it. We could do it for a month, 2 months, 3 months, however long we need. Even another year, it could be extended for another year. So, but it can be extended, and we see a lot of that today. I understand that. Now, a little word of caution. Somebody wants us to insure a $2 million home, and they tell me they're going to build it in 6 months. Well, that just doesn't happen. So I mean, I will probably push back on that. So you might want to think about the term of that project. And ideally, you want to write it for whatever the term is. If it's an 18-month project, let's write an 18-month policy. That's easier. Then you don't have to worry about it. But if we write 12 months, that's fine. And you want to extend it another 6, just make sure you don't let it lapse, because this is not like a permanent policy where you have, the company does not have to give renewal options and stuff. It's like, if you don't tell us, it ends. So make sure you tell us. Good question.
All right. Does your builder's risk policy allow permission to complete an occupancy?
Yeah, so it's a little different. I'm not going to read the whole form, but on the residential piece of it, they can move into the structure and they can live there for up to 90 days and still have coverage. So you have 90-day occupancy coverage on a single family being built. Now the key is, I will say this, if the builder charges them rent, so somebody moves in there and they charge rent, or the owner charges rent, coverage ceases, because then it's a rental property. So people can move in, but they can't be charged rent, because you don't want to do that. So that's 90 days built in automatically. On the commercial side, a little different. If people are going to move into something and operate it, we will need to add permission to occupy, which is an additional endorsement, which allows them to, occupy it for a period of time and still have coverage. So on the commercial side, if you have questions, give us a call. But the residential piece is a little simpler. And then if it's a single family being renovated, they have coverage even if it's occupied. That should not be a problem. Good question.
All right. What is the maximum limit for commercial building limits?
As I said earlier, be it residential or commercial, we can go up to 5 million frame, and we can go up to 10 million on the other classifications. Masonry, non-combustible, fire resistive, non-combustible, we can go up to 10 million, depending on where it's located and the protection class and a few other factors.
Okay. Can you have the builder with one policy and the owner with another?
Yeah, you don't want to have 2 policies on the same project, then you got a problem. Both carriers will be unhappy, and who knows what will happen with the claim. So once again, one policy for the project. Make sure the limits are proper. Make sure that one of the entities is the named insured, the other one's additional named insured, but you only need one policy. You definitely do not need 2 policies on the same project. In fact, if the companies were aware of that, they wouldn't even do it. So strongly advise not doing that.
All right. Now, when canceling a builder's risk policy after the property is complete, how do you protect the remaining contractor's interest until it is paid off for the last installment?
All right, well, so first of all, I wouldn't cancel the policy until the builder's interest ceases. Usually that's at the closing. They closed it, now it's in the owner's name, we're done. So there's no reason to cancel the policy prematurely. Once the builder's risk is done, then the only way to protect their interest would be some kind of permanent policy. But the issue you run into there is most permanent policies, a contractor can't get that type of coverage. So I think the question would be why, builder's risk, leave it in place until the builder's interest ceases, till they're done. So that's the answer, really.
All right, let's do one last question. Is there a max time period for vacancy?
I'm sorry, Darcy, with max time period for
vacancy.
Oh. Under our form, if it's a renovation project, we have a little clause in there that says if there's no construction activity for 60 consecutive days, the coverage is dramatically reduced. No theft, no vandalism, everything kind of reduces. So you don't want to get into that, because we are not a market for vacant structures. I think that's the question that we're really after here. So as long as it's an ongoing construction project, then we should have no problems on the renovation side. And as far as ground up new, you got 12 months coverage. If they completed early, but it's sitting there pending closing, there's still coverage. up until the expiration date. I don't think there should be a problem there, but I would always protect the property. We don't see too much of that today, to be honest with you. Things are not finishing earlier. It's just the opposite. We're extending. A vast majority of what we do is being extended. So, but good question. Well, once again, I really appreciate your time today. This was great. You guys had a lot of good questions. I think you were tuned in. And as always, my contact information is up there. And pick up the phone, send me an email. I'd like to know what you thought. And keep in mind, we'll be doing this again next month. It's going to be kind of around job sites and theft and those kind of things. What I'm trying to do is keep these things very current. So these are the things that we run across every day. And I think that's important for you guys to hear these stories. And we're here to help you in any way we can. So any type of builder's risk that you have going on, give us a call. We'll talk about it. So Darcy, thanks for running the show, and thanks for all of you that attended. Everybody have a great day.